Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we reviewed what we've learned up to this point about fundamental analysis with a 10-question quiz on monetary policy, trade flows, capital flows, and the U.S. economy. In today's lesson we're going to begin a new discussion on the fundamentals of the individual currencies of the world, starting with the U.S. dollar. So let's get started.
As we discussed briefly in our lesson on the main currencies of the world in Module 1 of this course, although there is lots of news lately about the US dollar losing some of its status, as of this lesson there is no doubt the US dollar is still king of the currency world. There are several primary reasons for this which we will cover in today's lesson, and which are behind the fact that no matter what currency a trader trades, pretty much everyone in the forex market follows the US dollar. The first reason why the US dollar is the king of the currency world is the fact that it is a part of each of the world's most actively traded currency pairs. According to the Bank of International Settlements, and as outlined here, these currency pairs account for 67% of the daily turnover in the forex market. When you add in the US dollar Swedish krona currency pair and all of the currency pairs and all of the currencies categorized as other traded against the US dollar, the total amount of turnover that includes the US dollar on any given day in the foreign exchange market rises to 89%. A second reason why the US dollar is still king of the currency world is because it is the world's primary reserve currency, accounting for over 63% of the world's currency reserves. A reserve currency is a currency held by the governments/central banks of other countries in large quantities. Countries do this so they can purchase goods which are priced in the reserve currency at a cheaper rate than if they had to convert, and to borrow money at a cheaper rate, since lenders will be more likely to lend knowing they hold large quantities of what is considered a more credible currency. Perhaps most importantly for traders, many countries, and especially countries in Asia, the most talked about example being China, maintain large reserves of US dollars so they can either peg the value of their currency to the US dollar or maintain a loose peg. The goal here is to either stabilize their own currencies and therefore their economies, and or to hold the value of their currencies artificially low in order to make their goods more competitive overseas, something which we'll examine further in our next lesson. The third reason is that many private businesses and individuals located outside the United States hold US dollars for trade reasons, or because they consider the currency more stable than their home country's currency. This, combined with what we just covered on the US dollar being the world's primary reserve currency, means that over 2/3 of all US dollars in circulation are held outside of the United States. The last major reason why the US dollar is still king of the currency world is because many major commodities such as oil, gold, and silver are priced in US dollars, making access to dollars essential for many people in the world that want to purchase these products. More than simple interesting facts, these factors can have huge effects on the value of the US dollar and are therefore extremely important to us as traders. Exactly how these things affect the US dollar, and therefore exactly what we should watch out for as traders, will be the topic of our next lesson. So I hope to see you then. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.